May 2015, question 3. Tambu Limited, a manufacturing company, started experiencing recurrent annual trading losses 3 years ago. Both the shareholders and the debenture holders of the company have accepted a reconstruction of the company by forming a new company to be named Fanaka Limited to take over the assets and liability of Tambu Limited. The statement of financial position of Tambu Limited as at 30th of April 2015 is provided below. So we have that. So we say that in this case, we have two companies. We have Tambu Limited. They have decided that they need to form a new company known as Fanaka Limited to take over the business of Tambu Limited. So that's an external reconstruction. So that means they have to liquidate Tambu Limited and then Tambu Limited to be taken over by Fanaka. Then we say that first step, you need to determine the purchase consideration. And how to determine the purchase consideration? By taking into account the amount payable to ordinary shareholders, amount payable to preference shareholders, amount payable to the debt holders, and then you capitalize the reconstruction cost. Additional information. Fanaka Limited was formed with an authorized share capital of 750 million ordinary shares of shillings 10 each. So that means the par value per share is 10. Number 2, the ordinary shareholders of Tambu Limited. So, to ordinary shareholders. The ordinary shareholders of Tambu Limited received 3 ordinary shares in Fanaka Limited for every 5 shares in Tambu Limited. So they received ordinary shares. They are told that the ordinary shareholders in Tambu Limited received 3 ordinary shares in Fanaka Limited for every 5 shares in Tambu. So for every 5 shares in Tambu, they received 3 new shares in Fanaka Limited. So how many ordinary shares did Tambu had? Yeah, they had 500 ordinary shares. What about 5 ordinary shares? Then you multiply by, then you are told that the shares from Fanaka Limited were credited at 6 each paid. But how much was the par value? 10. But each share was credited at 6. So there's a balance of how much per share? 4. Then you are told that the shares from Fanaka Limited were credited at 6 paid each. The shareholders were to pay cash to Fanaka Limited to make the share fully paid immediately on receipt of share. So that means Fanaka Limited gave them 300 shares, each at 10. But the company decided that they will pay 6, and then the shareholder had to top up the balance. So the company to pay for those shares 6 shillings, and then the shareholders to top up the balance of 4 shillings. So how much is this? You get 80. Good. So the 4 shillings per share. Now that one is what now they'll issue in cash. And then you are told that number 3. The 10% preference shareholders, so we are done with ordinary shareholders. Go to preference shareholders. The 10% preference shareholders in Tambu Limited received 4 ordinary shares in Fanaka Limited for every 5 preference shares in Tambu. So they received ordinary shares. They are told that the 10% preference shareholders in Tambu Limited received 4 ordinary shares in Fanaka Limited for every 5 preference shares. So for every preference shares, they received 4 ordinary shares. How many preference shares they had? What about 250 preference share? Then you are told that the ordinary shares from Fanaka Limited were created at 8 paid each, and the shareholders were to pay cash to Fanaka Limited to make the share fully paid immediately on receipt of share. So the 200 shares issued, it was created at 8. So the balance of 2 is upon now the new shareholders to pay the balance of 2 to make the share fully paid. Is going to get an amount of 1.1600. Number 4, dividends on 10% preference share were 4 years in arrears. So similar to preference shareholders, we had dividends in arrears. And we are told that dividend on 10% preference share were 4 years in arrears. So take 10% of the preference share capital. How much is the preference share capital? 2,500. Then there were how many years in arrears? 4 years. 250 times 4, you get an amount of 1,000. So that was the dividend in arrears. Now, how was that amount to be settled? Fanaka Limited accepted to settle the amount due by issuing 2 fully paid. 2 fully paid. Can you underline fully paid? 2 fully paid ordinary shares and 106% debenture for every 2,000 of dividend in arrears. Can you read that again? Two fully paid ordinary shares and 100 shillings debenture for every 2,000. So for every 2,000, you get 2 shares. And in addition, for every 2,000, you get a debenture of 100. What about 1,000? That was the amount of dividend in arrears. What about 1,000? What do you get? This one, you get 1 million shares, each at 10. Good. What about this? That's why I told you to underline fully paid. Get 50. Number 5, the debenture holders. So we are done with the preference shareholders. Now we go to debenture holders. The debenture holders accepted 25 ordinary shares for every 500 shillings of debenture, the shares being created at 8 paid each. The debenture holder were to pay cash to Fanaka Limited to make the shares fully paid on receipt of share. Just read the question again. Yeah, the debenture holder accepted 25 ordinary shares for every 500 shillings. So for every 500 shillings, they'll get 25 ordinary shares. How much was the debenture capital? Yeah, what about 1,000? Get an amount of 50 shares, each at 8. Yeah, each share was created at 8. So there is a balance of how much? 2 shillings. So that means the debenture holders, once they become the shareholders, the new company, they'll top up the balance of 2 shillings. So what do you get? 400. Number 5, the assets of TAB Limited were transferred to Fanaka Limited at the following values. So we're given the assets. Then you're told that goodwill was presumed to have no value and therefore was written off. Then number 7, Fanaka Limited paid 75 million to Tab Limited to pay for dissolution cost. So dissolution. Yeah, and we see that this dissolution cost should be capitalized. They paid an amount of 75. And you are told that, let's do that again, number 7. Fanaka Limited paid 75 million to Tab Limited to pay for dissolution cost. This amount is to be treated as a preliminary expense and is to be written off against profit in the following 3 years. So to be amortized for the next 4 years. To amortize, that means it will be part of it will be part of intangible assets. You need to capitalize that. So now, can you give me the purchase consideration? How much will Fanaka pay to acquire Tab Limited? That's 930? That's 935. Number 8. Number 8. Immediately after acquiring Tab Limited, Fanaka Limited purchased trading stock worth 150 in cash and settled 125 million of the trade payable balance. All the transactions were completed on 30th of April 2015. Required the necessary account to close of book of Tab Limited. So which are some of the accounts prepared to close off the accounts of the company in financial problem? Ordinary shareholders member account, preference shareholders member account, debentures account, vendors account, and realization account. Good. So let's start with ordinary shareholders member account. Ordinary shareholders members account. Let's start with the capital balance brought down. We had 5,000, and then you see that this members account. So anything under the equity that belongs to the shareholders. 10% preference share capital is not their wealth. They also have share premium. That's their wealth. There is share premium, an amount of 1,000. Then there is accumulated losses. So for accumulated losses, you debit. Accumulated losses, an amount of 21, 25. Then goodwill is their wealth, but the goodwill was written off. So goodwill written off. How much was the value of the goodwill? Yeah, 875. So that means at the date of takeover, the gross claim was 6 million. Of this 6 million, it was reduced by the accumulated losses and goodwill written off. So the balance, they were given shares to ordinary shareholders. They were given ordinary shares worth 1,800. So they were given ordinary shares by Zawadi worth 1.8. So the balancing figure is what they expect to realize. That one goes to the realization account, of which that is 300 times 4. You get 1,200, right? 1,200. Yeah, you see, they got 300 shares, each at 10, but they was getting an amount of how much? 6. So how much is the balance? 400. So if you take 300 times 4, you get how much? Then the other account we prepare is the preference shareholders. Members account. Balance brought down. How much was the preference share capital? It was 2,500. Then they had another claim. The dividend were 4 years in arrears. The preference dividend in arrears, an amount of 1,000. So dividends in arrears, it was an amount of 1,000. So that means they had a total claim of 35. How was this amount settled? So to preference shareholders, they were given ordinary shares by Fanaka, ordinary shares worth 1,600, and then to cater for this dividend in arrears, they were given additional shares worth 10 million and debentures worth 50 million. So they were also given additional ordinary shares worth 10 million. Also, they were given debentures worth 50. How much do they expect to realize? You get an amount of 18. So the balancing figure goes to the realization account. The other account prepares the debentures account. Debentures account. How much was the opening balance? It was 1,000. Then to debenture holders, this amount was settled through the issue of ordinary shares. They were given shares worth how much? 400. So they were given ordinary shares by Fanaka Limited worth 400. So what do we take to the realization account? 600. And the other account we prepare is vendor's account, also known as purchasing company account. So that for the vendor's account only records one item. That is good, the purchase consideration. And the purchase consideration was an amount of that 935. How was this amount paid? It was paid through the issue of ordinary shares, also debentures, and then we have cash. So that cash is for dissolution costs, an amount of 75. Ordinary shares issued by Fanaka Limited to acquire Tab. So we had ordinary shares. We also have ordinary shares. We have ordinary shares. Ordinary shares. Can you add the total? That it? That 810. Then they issued one debenture to pay the dividend in arrears, an amount of. So this how that 935 was distributed. And lastly, we need to prepare the realization account. What do we say about the realization account? What do you debit? You debit all assets at their net book value. So now let's go to the balance sheet. That's where we get the net book value or the carrying amount. We had building, an amount of 2050. Then there was motor vehicles, an amount of 1,700. Goodwill was written off. We had furnitures and equipment, out of 1087.5, and then they also had patents, amount of 462.5. Then to the current assets, there is inventories, an amount of 950. Then there is trade receivables, an amount of 700. Then you say that you also capitalize preliminary expense as well as you factor in the dividend in arrears. So there was dissolution cost, an amount of 75, as well as there was dividends in arrears, an amount of 1,000. Then what do we credit? We see that you credit the current liabilities. Now let's go to the balance sheet. There was bank overdraft, an amount of 75. Then there was trade payables. Trade payables, an amount of 375. Yeah. In that, if you take the assets, you raise the current liability, you get the net asset. Then you compare the net asset against what they were paid, and that is the purchase consideration. And the purchase consideration was an amount of 39.35. Then we can cross off the other account. Ordinary shareholders member account, there was a balancing figure of clearization account, an amount of 1,200. You debit the shareholders member account, you credit here ordinary shareholders members account, an amount of 12. Also to the preference share, there was clearization account here, preference shareholders account, amount of 1840. Also to the debentures to realization account, there is an amount of 600. Which one? 820? What about this? 825. Good. So that's part A of the question. Now let's go to part B. Part B of the question. Journal entries in the books of Fanaka Limited to record the acquisition of Tab Limited. Journal entries. What are some of the journal entries? To record the assets takeover. So that number one, you record the assets taken over, liabilities taken over, goodwill, and then the purchase consideration. So let's start with assets taken over. So what do you debit? What do you credit? Number six. Number six. The assets of Tab Limited were transferred to Fanaka Limited at the following values. So you have the assets taken over. So there was buildings. We had motor vehicle, furniture and equipment, patents. Also there was inventories. Also trade receivables. So that for the assets, you debit the asset, you created the business purchase account. So here you had 1550, 1375, 1075, you have 350, we have 700, we have 625. Then you credit the business purchase account. So add the total. 56? 75. Then still for the asset, there is an item you need to capitalize. That's the dissolution cost. Be part of preliminary expenses, which was an amount of 75. You debit the asset account, that's the preliminary expense. Then you credit cash account, an amount of 75. Then we determine the liabilities taken over. Now for the liability, we had non-current and current. For the non-current, we had debenture, which the debenture were paid through the issue of shares. So that means they took over the current liabilities. So for the liabilities taken over, we say that you debit the business purchase account. You credit liabilities account. Now let's go to the current liability. We have bank overdraft, amount of 75. Then we have trade payables, amount of 375. And if you add that to get an amount of 450. And then we determine the goodwill. And how do we get the goodwill? Is the difference between the purchase consideration, which is that 935, you raise the net assets taken over. So net asset is asset minus liability. So for the total assets taken over, you had an amount of 5675. Then you capitalize the preliminary expenses, an amount of 75, get the total assets taken over. Then you eliminate the current liability, 450. What do you get? So first of all, determine the net asset. Then you take the purchase consideration, you minus that. Give me the goodwill. You get? You get 1360? Negative, eh? So that means there was a negative goodwill. That's what we call a capital reserve. So that in case of capital reserve, what do you debit? You debit the business purchase account. You credit the capital reserve account or negative goodwill. You're getting an amount of 30? Sorry? 16? 1365. 1365. Lastly, the purchase consideration. For the purchase consideration, we say that you debit the business purchase account which was an amount of 39.35. You credit vendor's account, an amount of 39.35. Good. So you can copy. Run out to be quick. The others were done. Good. Let's proceed. Now, part C, let's prepare opening statement of financial position of Fanaka Limited. This is the easiest part. So you have the assets. Non-current assets. Note number 6. So we have the assets taken over. So they took over the building. Amount of 1550. Then there was motor vehicle. An amount of 1375. Also furniture and equipment. An amount of 1075. Also there was patent. Is that 250 or 350? That's 350. Now let's go to note number 7. Note number 7. Fanaka Limited paid 75 million to Tab Limited to pay for dissolution costs. This amount is to be treated as a preliminary expense and is to be written off against the profit in the following 3 years to be amortized for the next 3 years. So that means you need to capitalize and then you amortize for the next 3 years. So there was preliminary expenses, an amount of 75. Then we have the current assets. The current assets, they took over inventory. An amount of 850. Then we have trade receivables. Trade receivables is an amount of, is it 825 or 625? 625. 625. Then we have cash. Do we have cash? Yes. Now let's be here. Cash account. So let's go back to note number 2. Note number 2. The ordinary shareholders of Tab Limited received 3 ordinary shares in Fanaka Limited for every 5 shares in Tab Limited. The shares from Fanaka Limited were created at 6 each paid. The shareholders were to pay cash to Fanaka Limited to make the share fully paid immediately on receipt of share. So there was cash received by the company from the issue of shares. Ordinary shareholders, they were given 300 shares created at each. They were to top up the balance in cash immediately upon the receipt of share. So it's 300 times how much? 300 each at 4, you get an amount of 12. Preference share, 200 at 8. There was a balance of how much? 2. 200 each at 2, 400. This was fully paid. 50 at 8. How much was the balance? 2 to make the share fully paid. 50 each at 2, get an amount of 100. Then, can you go back to your journal entries? Preliminary expense, you debit. What do you credit? Good. We paid for dissolution expense, an amount of 75. Let's go to note number 8. Immediately after acquiring Tab Limited, Fanaka Limited purchased trading stock worth 1. Yeah, that's why the inventory was 700, but immediately we acquired additional stock worth how much? 150. In cash and settled 125 million of the trade payable. So of the amount we had, we acquired more stock. Inventory worth 150, and then we paid account payable, an amount of, we paid them 125. So how much is the cash balance carried down? You get an amount of 13. So Cash, we have 1350. Now give me the total assets. You get 72. Equity and liability. To the equity and liability, we have ordinary share capital. How much was the ordinary share capital? Can you go to your, there is account you prepared, vendor's account. There was an amount of? Yes, you take that 810, then you add 1700. Can you add 1700? Remember what we had, the share issued, some were not fully paid, are you together? But upon the acquisition of the shares, they top up the balance to make the share fully paid. What do you get? 5510. Or alternatively, you do this, let's be here. You take the number of shares issued. They issued 300 shares, 200 shares, 1 million fully paid shares. Those were the number of shares issued. Then all of them, they were fully paid because they were to top up the balance to make the share fully paid. And how much was the par value? 10. So what do you get? 551. 551 times 10, you get 55? 10. Then there was negative goodwill, which is capital reserve. How much was the negative goodwill? 1365. Non-current liability. Go back to the vendor's account. The company issued a debenture worth how much? 50. There was 10% debentures worth 50 million. Current liability. Let's go to the current liabilities. We had bank OD. Bank overdraft, an amount of 75. Then we had trade payables, an amount of 250 goods. We take 375, but we paid 120. 125. Let's try to balance that. We get 7250. So we can copy now. So that's the end of company reconstruction. We introduce a new topic. EPS is the amount of earnings. EPS is the amount of earnings. EPS is the amount of earnings attributable to each ordinary share. Attributable to each ordinary share. Attributable to each ordinary share. Full stop. There are two types of EPS. There are two types of EPS. Let's start with the basic EPS. Basic EPS. Let me see that. Basic EPS considers only the issued ordinary shares. Basic EPS only considers issued ordinary shares. Issued ordinary shares. It's computed as follows. It's computed as follows. It's computed as follows. So first of all, let me explain the difference between the basic EPS and diluted EPS. Now, for basic EPS, it only considers the issued shares by the company. But for diluted, it will consider both the issued and unissued potential ordinary shares. What are potential ordinary shares? Now, for example, if the company has convertible preference share, what does that mean by convertible? That means the preference shareholder can convert those preference share into ordinary share. If you have a convertible debenture, also that means the debenture holder can convert them into ordinary share. Though they have not converted, but they have that right to convert. So in dilutive EPS, that's when you consider the issued and the unissued. So how do we determine the basic EPS? Now, to get the basic EPS, you'll take the profit after tax, then you raise the preference dividends. And what do you get? Now, if you take the profit after tax, you raise the preference dividend, you get now what we call the earnings attributable. Earnings attributable to ordinary shareholders. Then you divide by the weighted average number of ordinary shares. Not just the number of shares, but the weighted average number of shares. Can show that. So you're saying that you take the earnings attributable to ordinary shareholders divide by the weighted average number of shares. When you talk about weighting, assume the financial year of the company starts on 1st of January. That means the year will end on that 1st of December. And at the beginning of the year, assume the company had 10 million outstanding share. That's 1st of January. Let's assume 2022. So that means of the outstanding shares at the beginning of the year, all these shares will be outstanding for the entire year. That is 12 over 12. Then 6 months to the end of the year, that is 1st of June. Is that June or July? July 2022. The company issued an additional 10 million shares. The company had 10 million shares. They issued an additional 10 million shares. So how many shares are issued by the company now? They have issued 20. But how many shares will qualify for dividends? You see the 10 million, the amount fetched only worked for the company for only 6 months? 6 months. So you wait 6 over 12 and you get an amount of 5. So when determining the basic EPS, you will not use the number of issued shares. You will use the number of the weighted shares, which will be an amount of. So that's what we call weighting. We write a paragraph here to say that weighting of shares is the activity where the number of shares outstanding at the beginning of the period, where the number of shares outstanding at the beginning of the period, the number of shares outstanding at the beginning of the period are adjusted with the shares issued, during the accounting period, shares issued during the accounting period. Full stop. It's usually done by multiplying. It's usually done by multiplying the number of shares issued during the period, multiplying the number of shares issued during the period by the time weighting factor, by the time weighting factor. And that's what I was trying to explain here. You take the number of shares issued during the accounting period, then you multiply by the time weighting factor. Let's look at issue of shares during accounting period. Let you see that? There are 2 types of share transaction. There are 2 types of share transaction. Number one, ordinary share issued at consideration. And number 2, ordinary shares issued at no consideration. Ordinary share issued at consideration. Do you have the ordinary share issued at no consideration? Those are the two types of share transaction. What's the difference between the two? Now, for the ordinary share issued at consideration, this is where the company issues shares and receives some additional resources in return. For example, if the company issues share at market price, that means they issue the share, they get the money. That's what we call the issue of share at consideration. Then we have issue of shares at no consideration. And this is where the company will issue new shares and they receive nothing in return, such as what? Bonus shares. When a company gives out bonus share, they receive nothing in advance. Or when the company decides to consolidate their share, share consolidation, like that. So let's start with the first one. Ordinary shares issued at consideration. Ordinary shares issued at consideration. See that? This is where the company receives additional resources. This is where the company receives additional resources in exchange for the shares issued, in exchange for the shares issued, in exchange for the shares issued, in exchange for the shares issued. Full stop. Then you have to see that. The shares issued, the shares issued are weighted effectively. The shares issued are weighted effectively from the day the company receives the new resources. Are weighted effectively from the day the company receives the new resources. The company receives new resources. Number two, ordinary shares issued at no consideration. Ordinary shares issued at no consideration. All right. So this is where the company issues new shares. The company issues new shares and receive nothing in return. And receives nothing in return. And receives nothing in returns. Full stop. You see that? The company utilizes the existing resources. The company utilizes the existing resources, to finance the issue of share, to finance the issue of share, to finance the issue of shares. Yeah, that means, for example, if the company effected a bonus issue of share, maybe worth 20 million. You see, number one, the ordinary share capital will increase, but we never received the cash. Where this money came from? Now, what happens? They do what we call reserves transfer. They can transfer the amount from either the retained earnings, they transfer to the ordinary share capital, or general reserves, they transfer, or revaluation reserves. So it means that they utilize the existing resources to finance the issue of shares. Then you write NB. Shares issued at no consideration. Shares issued at no consideration are not weighted. Shares issued at no consideration are not weighted. I know it's an NB, but you can underline it. Underline it. You underline it. So now let's look at examples of shares issued at no consideration. Examples of shares issued at no consideration. Examples of shares issued at no consideration. Number one, bonus issue of shares, bonus issue of shares, bonus issue of shares. Number two, bonus element, bonus element, bonus element in rights issue, bonus element in rights issue and share option. Bonus element in rights issue and share option. What's right issue? Issue of share to the existing shareholders at a price below the market price. That means at a discount. That means if the market price is 40 shillings, addition to the existing shareholder, you'll definitely give them a discount. So they might buy it at that 8 shillings. So here there is a discount of 2. Now that discount of 2, remember the shares will not read that 8. Now this that 8 is what will affect the cash account. But the ordinary share capital will be affected by the market value or the par value of 40. So that means that 2 shillings becomes it's like a bonus they are being given by the company. Number three, share consolidation. Share consolidation. And number 4, share split. Share split. Share split. Take out your handout. Handout page 3, question 1. Mark Limited reported a profit after tax of 112.8 million for the year ended 31st of March 2014. Can you underline the date? 31st of March 2014. Yeah, that's the year ended that 1st of March 2014. If the year ended on that 1st March of 2014, that means that financial year had started on 1st of? Yeah, 1st of April 2013. Good. On 1st of April 2013, now that's at the beginning of the year, the share capital of the company was as follows. There was 10 million ordinary shares of shillings 20 each. How many shares they had? Good, 10 million. That's not the share capital. Those were the number of shares. So the number of shares outstanding at the beginning of the year was 10 million. That's at the beginning of the year. So that means the weight will be 12 over 12. That means we'll be outstanding for the entire year. Then there was 7.5%, 5 million cumulative preference share. We only weight ordinary share, we don't weight preference share. On 1st of August 2013, now if the year ends on that 1st of March, now we are told that on 1st of August 2013, how many months end of the year? Use your fingers. Six, five, 4. Can you engage your fingers? Sasa nimesikia 7 tena. Bado nimesikia 4. Umejibu kwani ulikuwa unajibu nini? I'm saying that from 1st August to the end of the financial year, how many months? 8 or 9? Hey. Can you engage your fingers? Can you count again? I want just a single answer. I don't want to hear 4, 5, 6, 7, 8. 8 or 9? 8. Good. So on 1st of August 2013, the company issued 5 million ordinary share at market price. So on 1st of August 2013, there was issue at market price. And the company issued 5 million shares. How many months? 8/12. Now give me the weighted number of shares. Then after every share transaction, you sum up. So the number of issued shares is 15, but the number of weighted share now we have is 13, 3 recurring. On 1st of March 2014, how many months end of the year? On 1st of March 2014. How many months? That's 1 month. Good. On 1st of March 2014, 1 bonus share for every 3 ordinary shares to all the shareholders as at that 1st of December 2018 were issued. So the company effected a bonus issue of shares. Issue of shares. What was the term? For everyone you get 0, for every 3 you get 1. For every 3 you get? Good. So you take 1/3, and the company had 15 million issued shares. You multiply by 15, or you just do for every 3 you get 1. What about 15 million? You get how many shares? What do you get? You get 5 million, eh? 5 million. Good. How many months end of the year? Can you read? There is something I told you to write an NB and then you underline. We say that shares issued at no consideration are not what? And what an example of an share issued at no consideration? Bonus. Good. The shares issued at no consideration, they are not weighted. Now this is how you argue. Let's be here. For every 15 million shares, for 15 million shares, they were given a bonus of how much? 5 million. What about this weighted? 13.333. They get a bonus of how much? No, simply will be just be doing cross multiplication. We'll be taking this times that, divide by that. Sasa kuna mtu hajaelewa hiyo na nimeelezea hii. How have I argued this? How did I argue this? For every 3, no, there is nothing like that. I said that if 15 million issued shares, they got a bonus of how much? 5. What about this weighted? They could have gotten a bonus of how much? It's the same as always do cross multiplication. What do you get? Oh, that's what we call for recurring. Then we see that after every share transaction, you sum up. So the company has now issued 20 million shares, but those deemed which are weighted is 17,777. Then I told that required basic EPS as at that 1st of March 2014. Basic EPS. How do you get the basic EPS? We see that you take profit after tax, you raise the preference dividends so that you get the earnings attributable to ordinary shareholders. Then you divide by the weighted number of ordinary shares. How much was the profit after tax? Yeah, 112,800. You raise the preference dividend. Now, the second bullet, they told that they have 7.5%, 5 million cumulative preference shares of 40. So you take 7.5% of the preference share capital. We have 5 million preference shares, each at 40, you get the share capital, then 7.5% of that to get the interest. Then all of it, you divide by the weighted number of shares. How many shares do we have outstanding? 17,777,777. So how much will be the basic earnings per share? $5.5. Which you can copy. We do question number 2 of the handout. So you are not done. On 1st of May 2014, 1st of May 2014, A Limited had been issued 500,000 ordinary shares of shillings 10 per value. So they had issued 500,000 shares. That's at the beginning of the year, 12/12. Now, if the year starts on 1st of May, when did that financial year end? Pretty much. Itaisha lini? April 30th of April 2015. Good. On 1st of November 2014,